Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 30 free stocks, Mumu is going to give you up to 30 free stocks when you open a new Mumu brokerage account. You put $100 in that new Mumu brokerage account, they're going to give you 5 free stocks. You put $2,000 in your new Mumu brokerage account, they're going to give you 30 free stocks, publicly traded companies. Don't delay, act today. Get yourself down in that description box. Click on that Mumu link. Open up that Mumu account. Go get that free stock. Go get that free money. I will also send you a couple of Mumu tutorial videos to walk you through how to use the Mumu brokerage app. All you got to do is send me an email through my website, www.richardfain.net. Second link down in the description box. Listen, man, send me that email. Let me know you've opened the account. And I'm going to send you those videos because I want you to get yourself off to a great start to next week. This week has been incredibly volatile, guys, to say the least. We had a lot of flip-flop action. A lot of tariffs on, a lot of tariffs off, and it just confused the whole market. It just freaked out investors. And when investors are freaked out, they don't invest. They move their money to safety. And that's what you've seen all of this week. You've seen investors come in for a little bit and then flee for safety. Why? Because there's too much uncertainty in the market. Right? We don't know what we want to do. We don't know if we want to put tariffs on, if we want to take tariffs off. We don't want to know if we want to postpone. We don't know. Right? So when you have uncertainty, especially in the financial markets, especially in the stock market, investors don't like that. So they just say, well, you know something? We'll dip our little toe in, we'll take our little toe out, and we're going to leave. And that's what they've been doing. So what you saw this morning, Friday morning, you saw the February jobs report come out. That February jobs report actually showed that the labor market is still on solid ground, right? Wasn't adding too many jobs, wasn't too fewer jobs being added. It was about just right, right? We came in at 151,000 new jobs added in the month of February. Right? Estimates were we would add 170,000 new jobs. So it was a little bit underestimate. We were lighter than expected, but 150,000 jobs added is still a pretty decent labor market. So that information is not going to force the Fed to cut rates any sooner than they're planning on cutting rates. Because from the Fed's perspective, the labor market is doing exactly what it should be doing. See, the Fed has 2 mandates. Those 2 main mandates. Actually, they have 4 mandates, but 2 main ones are price stability, which is what? Keeping inflation down so that everybody that lives in America can afford the basic things they need to live. That's their number 1 mandate, is price stability. And then their second mandate is what they call maximum employment. They want to make sure people that want to work can work. That's maximum employment. So the Fed right now are focused on what? They're really focused on maximum employment. Because for the last couple of years, they were focused on what? Inflation, getting inflation down. That's why they was jacking up rates. Since 2022, they were jacking up rates until about midway through 2023, and they put a pause on jacking rates. But for about 18 to 20 months, they just kept jacking rates. Why? Because they were trying to get inflation down so that they could put price stability back into our economy, which they did. So now they moved their focus to what? Maximum employment. That's the reason why they look at the labor market, the jobs report, and other data. They look at the unemployment data. Now, one thing we found out today when the jobs report came out is that unemployment ticked up a little bit. Last month in January, it was at 4%. February, it ticked up to 4.1%. Now, the Federal Reserve has already went on record and said that they believe unemployment is going to get to about 4.3% this year. If it goes above that, that's a red flag. You will see rates come down to stimulate what? The labor market, right? So if unemployment goes over 4.3%, then now the Federal Reserve starts to paying attention. They're not going to pay attention to it if it's under 4.3% because they've already predicted it would be 4.3%. So right now, the labor market is doing exactly what the Federal Reserve wants it to do. That's the reason why you saw, in my opinion, along with the flip-flop on tariffs that we get every day, the flip-flop on tariffs, and since the February jobs report came in neutral, that's why the market, in my opinion, late morning start the selling off, is because there is no news that the Fed can take to encourage them to reduce rates any faster right now. It's not. So where are we at? Now we got to look to what? The CPI inflation report for February, which will be coming out, I believe, next week. So that's the next one you'll be looking at, the Fed will be looking at. Jobs report came out today. Fed said, hey, nothing for us to do here. Labor market's doing fine. Little light, but not too light. We're okay. Unemployment under 4.3%, which we predicted, we're okay. So that's not going to force them to do anything. They're going to still pause and take their time based on that report. And the market knows that. That's why you saw a little bit of sell-off. So next week, you'll get CPI inflation report for February. Let's see how those numbers come in. And that will give us some indication how what inflation is doing, right? We'll get CPI and we'll get PPI, wholesale and retail reports on inflation. We'll get those next week. So we'll see what the market does. I can tell you right now, the market is going to continue to be volatile. So just be on the lookout for that, guys. Here's the thing. For me, got the two strategies, right? I got the short term and I got the long term. So the short term strategy, I'm just looking for whatever the market gives me. I apply the 10 a.m. rule. And the 10 a.m. rule basically is the first 30 minutes that the stock market is open is the most volatile 30 minutes of the day. So the 10 a.m. rule says don't do anything until after 10 a.m. and then figure out which way the market is going, pick your entries, go make you some money. That's what I do now. I just follow the 10 a.m. rule. I don't care what it does in the first 30 minutes. I give it 30 minutes, and that's when I jump in the short term. So I was in SoundHound today, got out of SoundHound, didn't do what I thought it was going to do, made a little bit of FCF, and that's it, right? So that's how fast this thing is moving. I know we got a lot of experts in the chat who are billionaires, but I'm not sure why they're in our chat, but I know they make way more money. They're billionaires. They make billions of dollars a day, but they're in my chat. I love you guys. Thank you for being here. Also, I want you guys to understand the long-term portfolio, though, is ripe. It's ripe for the picking. Anything you want, Palantir, Mag 7, any big boy ETF, all of them are discounted right now, guys. So if you're looking to build wealth long-term and you got some extra cash you're trying to put into something that you're willing to leave it in there for 2, 3, 4, 5 years, you have anything you want right now because it's all on sale. So for you long-term folks, don't miss this opportunity to pick up really good, historically proven individual stocks or ETFs or index funds right now. They're super, super on sale. At some point, they will go back up. Whenever we stop flip-flopping on tariffs, maybe. I don't know. Whenever that is, I have no idea. We may do this every day for the next 4 years. We may just flip-flop. So be prepared for that too. But at some point, we'll go higher. We'll get this thing dialed in. We'll have some certainty back in the market at some point, and we'll be able to be a little bit more predictable. Right now, it's totally unpredictable. So be careful. Get you a game plan. Stick to your game plan, right? And don't allow people to talk you into doing stuff. You do what you feel like you need to do. But let me give you a little bit of what the experts are saying about what happened today, and we're going to close this thing out. The S&P 500 closes higher in volatile trading Friday, but index points worst week since September. There you go. That's your headline from CNBC. Friday saw volatile trading, with the Dow falling more than 400 points at session lows. The S&P and NASDAQ both fell more than 1% at their worst points in trading today. That would have been about late morning, early afternoon. It was an apocalypse all over again, right? It's like we're having an apocalypse every day, though. Why? Because we got so much uncertainty. We got so much flip-flopping going on. It causes chaos. It causes an apocalypse every single day. So you got to be built for this, guys. If you're not built for this, take your money and go to safety. Put it in the bank. Put it in a high-yield money market. Put it in a CD. Maybe even buy you some treasury bonds, because all that stuff is guaranteed up to, the FDIC gets you up to 250, guaranteed. Your treasury bonds are guaranteed by the federal government. So if you can't stand this volatility, get out of the kitchen. If the heat up too much, get out of the kitchen, go to safety, because this is not the market you want to be in. If you get stressed out about your money going down in value, you don't want to be in this market, because it's going to go up and down, guys. With what's going on right now, listen, man, I keep telling y'all, the American people are not the number one priority right now. We're not. So you better make yourself the number one priority. Here we go. Investors tried to shake off a weaker than expected jobs report released Friday, which raised further concerns about our economic softening and briefly sent Treasury yields lower. Non-farm payrolls increased by 151,000 jobs in February, less than the consensus forecast of 170 or 170,000 from economists. The unemployment rate ticked higher to 4.1. That came as stocks have been on a roller coaster ride this week, with 47 tariff policies worrying investors about future U.S. growth and inflation. 47 said on Thursday that a swath of goods from Canada and Mexico that are covered by the North American Trade Agreement, known as USMCA, would be exempt from the announced duties until April 2nd. See what I'm saying? We get a little flip-flop. First it's 25% on everything, and then the next day we come out, oh, these get exempted until April 2nd. So it's just so much going on. This is why investors are fleeing to safety. This is why you see the roller coaster ride, the apocalypse every day, is because of this, right? The Federal Reserve sitting back and saying, we ain't gonna help y'all out of this. We ain't doing nothing. The labor market is fine. Inflation is fine. We're gonna sit back and wait until we can get a consistent message about tariffs. See, right now, we don't have a consistent message on tariffs. We just got a bunch of flip-flop. We got a bunch of news press coverage every day. We have a news press coverage every day where we flip-flop, and it just sends the market upside down. So the Fed says, no, we're not gonna bail y'all out of this. We're gonna sit back and wait. And y'all can't force us to reduce rates. That's what the Fed's posture is right now. The Fed's posture is, we're gonna sit back and take our time. We will decide when we reduce rates. And right now, they ain't finna reduce them. See, they got a meeting coming up in March, this month. They got another meeting. They're not gonna reduce rates, guys. So don't look for no rate reductions to bail us out of this thing, because they're not finna do it. The only way the Fed will reduce rates or cut rates if they can see clearly that we're going into a recession or that the labor market is starting to falter. And right now, they don't see that yet. Now, don't get me wrong, through March 3rd, The Atlanta Fed came out with the GDP Now report that's showing GDP is a negative 2.8% through March 3rd of this year. That means we are headed to a negative quarter of growth in the United States. I don't know when the last time we had a negative quarter. You guys tell me. Drop it down in the comment box and let me tell me when the last time we had a negative quarter of GDP growth. We're getting ready to have one right now in the first quarter of 2025 if we don't stop flip-flopping and get this thing back on track. We're about ready to have one. We don't need but two, and that's considered a recession. Just saying. So I told some of y'all already, if you ain't getting your house in order, your financial house in order, you're going to get caught with your pants down. And it ain't going to feel good. It's not going to feel good when you get caught with your pants down. Everybody looking at you and you got your pants down. You better get your financial house in order because I'm telling you, man, we don't know what's going to happen because, again, the American people are not the number one priority here, guys. You got to understand this. This is my opinion now. The American people are not the number one priority right now. The number one priority is the wealthy, the oligarchs. Those are the number one priorities. You're not. Now, people are going to talk and tell you are, but you're not. You're not. So you better make you and your family your top priority. Get your financial house in order. Live on less than what you make. Live on a plan, which is a personal budget. Get yourself out of consumer debt. Save and invest. That's the only thing going to save you, man. It's the only thing going to save you from this apocalypse. And I know some of y'all are going, oh, you're talking negatively. No, I'm not. I'm just trying to get you prepared for the worst, but hope for the best. That's what I'm trying to get you prepared for, because I want the people that follow me to understand where I'm at. I got myself prepared. I got my reserve cash. I'm ready to go, liquid. I've still got my investments, right? Because no matter what happens over these next 4 years, at some point we coming out of this thing. I got 9 years before I retire. So even if I got a flounder for 4 years, I got 5 left. Even if we flounder, I'll use my short-term strategy to make me some money, and I'll use the long-term strategies just to buy deep discounts as much as I can afford to buy. I'm going to buy them and stock them away. I'm going to stockpile them until we come out and there's sunshine, consistent sunshine. Right now, there ain't no consistent sunshine. One day it's sunshine, next day it's raining. The next day it's thunderstorms. The next day, hurricane. It's just the way it is right now, and it's going to be that way for a while. So get used to it. Get your plan together no matter what, because you can build wealth in both good and bad times. You can build wealth in both good and bad times. This week, I made about 15 grand on my little short strategy. Not a lot of money for my taste, because I normally make way more than that. But it's so volatile right now. That's all I can tolerate. Get in, get out. Get in, get out. And then what am I doing? Taking that money, flipping it into what? Long-term investments, FTEC, SPLG, Mag 7, just buying them. I don't care. Keep dumping. I'm going to keep buying them, because at some point we're coming out of this thing and there's going to be clarity. I don't know when. It may be 4 years from now before we come out of this thing. Because again, right now, the American people aren't the number one priority. It's oligarchs, 1%ers, the elite. That's my opinion. You ain't got to agree with that. But in America, we're entitled to our own opinion. That don't mean I'm not a proud American. That doesn't mean I don't support our government, because I do. But I also have an opinion. I ain't got to agree with everything those people say. Maybe you do, but I don't. I don't have to agree with everything the government says in our country. I'm an American. I'm a proud American. I'm going to support our government, but I don't have to agree with everything they say. And you may want to consider that for yourself. Right? Have your own opinion. You ain't got to be disrespectful or any of that stuff, but have your own opinion. That's one of the privileges our Constitution affords us, is the ability to be able to have our own opinion. Now, I'm not a disrespectful guy, and you'll never hear me on here disrespect anybody in our government. You'll never hear me on here disrespect another human being. That's not my thing. But I do have my opinion about what's going on, and I'm more than willing to share it, because it's just my opinion. You may think differently, and that's okay. That's the great part about being here in America. We get to have a different opinion. Problem is, most people want you to have their opinion or they are 100% against you. See, that's the problem. Most people, if you don't think just like they think, boy, they're after you. That's the problem. We got to get out of that, right? First thing we got to do is get back on track and put the American people first. I think if we can get back on track, put the American people first, we'll be fine. I'm okay with tariffs as long as if we're going to tariff people, let's just tariff them and move on. What I have a problem with is when we say we're going to tariff, then all of a sudden we come out with the big press conference, we tariff, and then the next day we come back, oh, no, sorry, mistake. We're going to pull back the tariffs on these products, but everything, okay, mistake. We're not going to pull back. We're going to go forward again. That's the problem I have. Let's make a decision and stick with it, right? Here's the deal. Here's the deal right here. That came as stocks been on a roller coaster ride this week with 47 tariff policies worrying investors about future U.S. growth and inflation. 47 on Thursday said that a swath of goods of Canada and Mexico that are covered by the North American Trade Agreement known as USMCA would be exempt from the announced duties until April 2nd. The move effectively walked back much of the original plan for levies on the two countries, along with China. See what I'm saying? We come out one day, no holds bar, we put it in effect. Next day we come out, we walk them back. Pretty much everything we said, we walked it back. Now we'll come out next week, back on again. That's all I'm saying, guys. We got to get out of this at some point, hopefully. The market does not like uncertainty, said Chief Investment Officer at GDS Wealth Management. While we expect the market to find its footing and recover from the tariff-driven sell-off, investors should brace for continued choppiness until these uncertainties are clear. What did I just tell you 5 minutes ago? See, I ain't no expert, but this is an expert. Let me read what the expert says, because I know some of y'all need to hear it from the expert, because I'm not. Let me tell you what the expert just said. Here's what the expert said. The market does not like uncertainty. This is coming from the expert, Chief Investment Officer at GDS Wealth Management. While we expect the market to find its footing, see, he expects the market to get back on track at some point and recover from these tariff-driven sell-off. That's all it is, guys. We ain't got no problem right now other than this tariff-driven sell-off. Investors should brace for continued choppiness until these uncertainties are clear. There you go. Enough said about that. Complete chaos. But we still can make money. We can still invest short-term and long-term using traditional investing methods and build wealth. Don't let this scare you. I tell my folks in my Wealth Builders financial community on Patreon, because we got a lot of people over there and they do a lot of good stuff. We got 1,800 members in our financial community. But I tell them, listen, guys, get your plan together. Be patient. 10 a.m. rule, because it's too volatile to be in here jumping out there first thing in the morning and you think you got a hot one, and in 5 minutes, you down in the gutter. That's how fast it moves. So I tell them, be patient. Pick your one. If you're going to use the short-term strategy, pick your one or two. Plan the night before. Use the 10 a.m. rule. Let things settle out. Let the volatility leave. And then once you figure out which way the market is going today, or at least you get a good idea, because we never know with all this tariff-driven chaos, this tariff-driven apocalypse, we never know. So at least give yourself 30 minutes to let the market figure out the trickery. The trickery is going to happen in the first 30 minutes, in my opinion, right? So I let the trickery work itself out. and then I zero in on my target, get me a good entry, and I wait. As soon as I hit profit, I don't overstay my welcome, I'm out. Right? I don't care if it's $1,000, $500, $200, $5,000, whatever it is, whatever you're investing. If you're in the short-term strategy, don't overstay your welcome. Because if you overstay your welcome, they're going to kick you out at some point. And that kick you out means all your profit that you saw earlier going to be gone. 5 minutes. You're going to turn your head and turn back around and it's gone. That's how volatile this thing is. So if you're implementing the short-term investing strategy, 10 a.m. rule, have your entry, execute, have your exit, don't overstay your welcome, get your butt out of there, live to fight another day. That's what I did today. Actually, I did that twice. I did yesterday morning, executed on APLD, made good profit, got out of APLD that morning, got into SoundHound in the afternoon, and guess what? That's when the apocalypse happened. I got in SoundHound right before the flip-flop, right before 47 came out with the tariff information, and then all of a sudden, boom, it went to the bottom. So I had to stay in SoundHound overnight. But guess what? I got out today. My exit was $10 a share. It never got there. Not in normal hours, it didn't. So I parachuted out around $9.85. I parachuted out. Lived to fight another day. Took my little small profit, dust myself off, get ready for Monday. Live to fight another day, right? So that's the key on the short-term investment strategy. Long-term, obviously, is pretty simple. Go buy big boy blue chip at a discount and hold them long-term. And just keep doing that every single time you got money. Just big boy blue chip, DCA, every time we get a flip-flop and things go to the gutter, the apocalypse kicks in, go to the war chest, pull some money out, throw it in that thing, and just let it ride. That's what I'm doing. Not financial advice, not trying to tell you what to do. I'm just telling you what I'm doing. That's what I do. Take money out of the reserve, boom, buy FTEC, SPLG, Mag 7, Palantir, and let it ride. 9 more years on that strategy. Short-term strategy is cash flow. Pay for the lifestyle, pay for the Ferrari I just picked up a 2025 Ferrari 296 GTS today. Go to my Instagram. Well, it ain't on my Instagram. Yeah, it is on my Instagram. Go to my Instagram. You'll see it. A couple weeks ago, I did a short little reel on it, but I picked it up today. So I'll do a proper review on it at some point in the future. Right now, I'm more worried about making money, not doing automobile reviews. So if you want to see a sneak peek of it, go to the Instagram and check it out on the Instagram. A couple weeks ago, I did a little, but I picked it up today. And that's what I use the FCF for, man. The long-term portfolio is for retirement, right? When I'm not working anymore, it's going to produce income for me to take care of me in the old age. But right now, when I'm a young man, I feel like I'm a young man. I'm 57. I feel like I'm a young man. I'm still enjoying my life. So I make this money, I pay myself first by taking care of the long-term portfolio. And then once I pay myself first and take care of the long-term portfolio, I take what's left, put some of it in reserve, and then I take some of it and I go out and have a good time with myself. I go buy cars. And that's what I did today. 2025 Ferrari 296 GTS with the roof off. Just picked it up today. Why? Why am I able to do those kind of things? Because I get out here and I earn. I don't make no excuses. I get out here and I earn every single day, 365 days a year. And I invest. This 296 is being bought from investments that I've made in the first 2 months of this year. Almost $400,000 in short-term investments. Flipping little gorilla stocks. Right? So all I'm telling you is anything's possible, man, if you put your mind to it. I'm not a CPA. I'm not a CFP. I don't know how to do options trading. I don't know anything about day trading. I don't know anything about Forex. I'm just a guy that says, hey, man, companies are here for a reason in the stock market. The reason is they go up and down in value. My job is to figure out when they go down in value, catch them, and as they go back up in value, take me a little cash flow and hop off the escalator before it get to the top. I just hop off the escalator. I call it the parachute cord, right? That's my job every day, guys. That's one of my jobs. I get into these stocks every single day the market is open. And I get $1 or $2, 50 cents, 75 cents. Whatever the market will give me, I'll take it. But it adds up. $10,000 here, $5,000 there, $3,000 there, $20,000. It adds up. Now, I'm not telling you to do that. I'm just telling you what I do to be able to afford the lifestyle that I have. But I still invest long term because I know at some point I'm not going to be able to do this no more. So I need to have a nest egg to take care of me when I'm an old man. Right now, I'm not an old man. I'm a young man. So I like the things young men like. I like cars. So I buy cars. That's my thing I love. Right? So whatever you love, assets will help you enjoy it. Whatever your personal enjoyment is, assets will be there to help you with your personal enjoyment, whatever it is. Everybody has different personal enjoyment. Whatever your personal enjoyment is, assets, guys. Now, here's the last thing, and I'm going to get out of here. Down in that description box, you got first link, the Mumu link. Mumu is going to give you up to 30 free stocks. That's where it starts for a lot of you guys. You got to have a brokerage account. And I have a wonderful brokerage app that I use called Mumu. That's where I'll be making the big boy trades. They're going to offer you up to 30 free stocks if you try out their brokerage app. It's the first link down in the description box. It's the Mumu link. Open it up, put $100 in there. They're going to give you 5 free stocks. You open it up, you put $2,000 in there. They're going to give you 30 free stocks. Publicly traded companies. Don't delay, act today. For you folks that want to change something in your financial life, change it. Change it. I was where you were at 25 years ago. I was right where some of y'all are. Didn't know nothing about nothing. But I did have the burning desire to change it. So I just started doing stuff and I didn't know what I was doing. But I learned. You got to start somewhere. Mumu will be a perfect place for you to start. Get yourself down in that description box. Click on that Mumu link right now. Open up that Mumu account. Go get that free stock. Go get that free money. Send me an email through my website, www.richardfain.net. Second link down in the description box. Let me know you've opened that Mumu account, and I'm going to send you some tutorial videos to help you learn how to use this brokerage app over the weekend. So on Monday, you're ready to rock and roll. Or at least you learn the app by Monday, get your money transferred in there, and sometime next week, you'll be ready to roll. Stop making excuses. You don't have to know everything. I don't know everything. I'm not a CFP. I'm not a licensed financial advisor. I'm just a guy that says, hey, man, it's a good company. They make money. They may not make money, but people think they might make money at some point. I might as well put my money in there and get me a little cash flow from them. And that's what I do. I'm not saying you can do that. I'm just telling you, if you don't try, you'll never know. Now, you can be hesitant and scared and not do anything for the rest of your life and live in fear all your life. Go right ahead. I'm not going to live that way. Whatever mistakes I make, I'll own them. I ain't going to blame nobody for the mistakes I make. That's on me. But I'm not going to live my life scared and afraid. I'm never going to live my life that way, guys. You shouldn't live your life that way either. Right? Hey, do me a big favor. Check out the Wealth Builders. That's my financial community, 1,800 strong in there right now, guys. And all we do is help each other build wealth. We're called the Wealth Builders. We have a financial community on Patreon. If you check out my website, inside that website, you're going to see a membership button or a join button. Come join us. We'd love to have you. None of us are experts. We don't try to tell you what to do. All we do is share best practices, drop golden nuggets, drop tips, what's working, what's not working, provide a safe environment where ain't nobody trying to sell you nothing, upsell you, taking your private information and sell it to people. We don't do any of that crap. I don't allow any of that in that financial community. So if you want a safe place to bring yourself out of the matrix where ain't nobody going to help you, to a place where everybody's going to help you, not to tell you what to do. Hey guys, I'm here. Tell me what to do. No, you get in there and you ask questions. Hey guys, listen, I'm trying to build some wealth. What are you guys using to build wealth right now? What are you guys buying in the short-term investment strategy? What are you guys buying in the long-term investment strategy? What do you guys think about this? Here's my situation. What would you guys suggest? That's how you got to come into the community, guys. That's how you learn, because we're a community that teaches you how to fish. We're not a community that's going to give you a fish. So don't come there looking for fish. If you come there looking to learn how to fish, you're in the right place. You're in the right place. Well, appreciate y'all, man. I got to get out of here. I got to go to my daughter's track meet. She's running this afternoon, and I got to go check her out. So appreciate y'all for rocking with me. Hey, man, don't allow this tariff-driven sell-off to get you down. Don't let it. It won't last forever, guys. At some point, we got to get a clear and cohesive tariff message at some point. I don't know when that's going to be. We may flip-flop for the next 4 years. I don't know. Who knows? But I don't care if we do flip-flop for the next 4 years. I'm going to still make money. I'm going to still make money. You can make money in good times and bad times. If you don't know how to do that, get over to the Wealth Builders, send me a direct message, and let's talk about it. I'll tell you what I'm doing. And then if you want to copy that plan, knock yourself out, right? Appreciate y'all, man. Stopping by the channel for the first time. Please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in the dome, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy. And when life smiles at you, smile back. Peace.